Hello everyone. Yesterday in the aftermarket hours, RBI released the monthly bulletin in which they said lots and lots of different sector information. So in this video, we're going to discuss those in detail along with our regular pre-market report for today, 20th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, what happened in Indian market yesterday? In the last video, we discussed about the windfall tax reduction and the steel anti-dumping investigation against the Vietnam and how possibly it might be positive for oil-related stocks and metals. In addition, yesterday morning, there was a dollar sell-off in the Asian market due to rate cut optimism and there was an indication of demand increase in the Chinese market. Both in turn increased the oil and energy sector to around 1.5%, whereas the metal sector increased near 2%. However, around morning time, investment firm Nuvama released the earnings summary report for all the listed 500 Indian companies' quarterly results. Overall, the market's Q1 performance is slower as both profit after tax and revenue didn't increase as expected, and also the growth rate was lower compared to the previous 4 quarters. Here they said decline in growth was mainly due to the decline in the performance of leading sectors such as auto, banks and cements. On the other hand, due to the low base effect, FMCG, chemicals and power sectors had higher growth. So if we see the sector wise, auto and financials were the major draggers, especially banks, since they highlighted two issues. One, net interest margin was at low level, and two, very important and mildly alarming, retail sector loans showing the early signs of stress. Hence, that's the reason why banking was underperformed in Nifty yesterday and it was very volatile. Institution-wise, FIA was back onto their selling mode. The net sold for 2,670 crore rupees, whereas on the other hand, DAI did support the market as they net bought for 1,800 crore rupees. So those were the quick takeaway from yesterday's Indian market. Then coming to US, two things last night defined their market. One, before the US market opening, Goldman Sachs revised their 12-month recession probability down to 20% from last week 25%. 2 weeks back, this present recession fear was created by Goldman Sachs, since on August 5th, they increased it to 25%. Anyway, they reduced it again, so that's the first positive. Second, in addition to Goldman Sachs, JP Morgan also released the statement that they were very positive on US stocks. As they said, in the final December quarter, they expect S&P 500 to give return around 4.2%. Because of these two US big bank statement, last night US market closed positive. Dow Jones up by 0.58%, S&P 500 increased 0.97% and Nasdaq increased 1.37%. In case of VIX, it further dropped by 1% and moved around 14.5. Regarding Indian ADR, no recession in US means it's always straightforward positive for IT stocks, and in addition, there are some positive for IT stocks in the RBI monthly bulletin, which we'll discuss in a moment. So, IT stocks ADR increased over 1%. However, banks wise, ICICI Bank ADR was down 0.5% and HDFC Bank ADR closed mild positive. Hence, we can say banks were mixed. In line with US market and IT ADR positive close, GIFT Nifty also increased mildly and early morning today it closed at 24,660. Equating it with the spot market, it's kind of indicating 50 to 60 points gap up opening. Oil wise, yesterday Indian market trading time, it increased above 2%, but in the night, it kind of fell back closer to the flat line. At the time of this video, WTI crude trading at $74 per barrel and Brent crude closed at near $78 per barrel. So these are the things happened yesterday in the global market. Now let's discuss the new India related info. As I said, yesterday in the aftermarket time, RBI released the July monthly bulletin. There are 3 important takeaways in it. First point, lately always investors had this worry, like in India there is not enough private capital expenditure, but rather than capital expenditure was mainly performed by government. But in this financial year so far, the private capital expenditure in India is increased by 54% compared to a year ago. From the stock market perspective, this is mainly positive for realty, manufacturing and power sector. Second, it's about the service sector spare capacity. Simply not used additional service capacity. So as per this RBI bulletin, that was declined to the 10-quarter low value 11.3%, meaning the service sector in India is utilizing most of its resources like before 2020 pandemic. This is positive for all service sector, especially to the IT stocks. Third, regarding banks, RBI Bulletin also highlighted the issues around Indian banks' low deposit growth in compared to its higher credit growth rate. A year ago, banks issued only for 1.89 lakh crore rupees worth of CD, certificate of deposit. That in order to keep the credit growth rate phase, this financial year they issued it for 3.49 lakh crore rupees, which is massive. So it's understandable why banks ADR were mixed rather positive, since the money from CD, certificate of deposit, is always higher than the FD or current account cost. Hence, this will influence negative on the bank's net interest margin. So those were the things I thought it's important from the RBI monthly bulletin. Anyway, let's move on. Then the next one, as per CNBC 18 TV, today, one of the Singapore-based FII is expected to sell around 3,500 crore rupees worth of Zomato. Hence, today, Zomato will be on focus. Then, final info is about metals. Yesterday it was rallied. However, yesterday in the aftermarket hours, global rating agency Fitch released the statement that this last week Supreme Court mineral mining tax ruling expect to increase the operating cost for all the metal and mining stocks. So today, again metal and mining stocks will be on focus. As a summary, US market closed positive, most ADR looking positive, and this RBI bulletin also adding the positive rally. Hence, we can expect a gap up opening of 50 to 70 points. However, banking stocks looks weaker due to its low deposit growth issue. Regarding the things to look out, early morning today, before our market opening, Chinese interest rate decision is due and the expectation is to keep the interest rate unchanged. But we know last month they did the surprise rate cut and it influenced the whole global momentum on the negative side. So hope it won't happen again today. Then at 2:30 p.m. Europe's consumer inflation data is due and in the night US Fed Vice Chairman and FOMC member both speech are scheduled. And these are the important items we need to keep an eye out today. Coming to technical, Nifty opened 90 points gap up, but it was in the consolidation mode throughout the day and closed around 24,570. Thus on the daily chart, Nifty formed a small bearish candlestick pattern with a minor lower shadow. However, it continued the higher high, higher low formation and also it sustained above all key moving averages. In addition, it stayed above the Bollinger middle band. So all indicates a positive sign. Hence, as long as Nifty sustains above 24,500 to 24,550 area, most probably it will move towards 24,700 to 24,800 zone. Whereas 24,400 to 24,300 range is expected to act as a support area. In case of Bank Nifty, it opened 150 points gap up. However, could not sustain and finally closed below 50,500. Thus on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candlestick pattern. Here, unlike Nifty, Bank Nifty is mixed. It maintained higher high, higher low formation for another session, which is positive. But on the other hand, it's still below the 20-day and 50-day exponential moving average. Hence, unless Bank Nifty surpasses and sustains above this moving average, technically we can expect consolidation to continue with support at 50,000. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 24,600 and 24,800 with maximum new call option writing at 24,600 strike followed by 25,000 and 25,200. On the put side, the maximum open interest was at 24,000 strike followed by 23,900 and 24,500 with maximum new put option writing at 23,900 strike followed by 24,600 and 24,000. Thus, from options data, Nifty might encounter resistance at 24,600 to 24,800 on the higher side, with immediate support at 24,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.